Okay, recording this video on Friday the 24th of June 2016. It is 1:36 a.m. Chicago time. It's late afternoon here in Sydney, Australia, and what an unbelievable 24 hours it has been in the market. All a result of the Brexit vote. The Brits have voted to exit the European Union, caused massive moves in the market. I'm going to show you my global macro charts. This is the day we have been waiting for. The last couple of months we have just been winding up, kind of waiting for this decision to come out. And now finally we have busted out of our channels and we've started moving in a direction. And it sets us up for trade for the next 3 months or so, kind of directionally. So I want to talk about that and run through my global macro charts. But before doing that, just to say I'm kind of thrilled and stunned that the Brits kind of actually got this through. Thrilled because, and this is a 50-50 thing. Everybody out there has a point of view one way or the other. It's like I don't think either point of view is right or wrong, but can we at least maybe get behind this one thought that a Brexit means that the British have one less government sitting above them. We get rid, hopefully, in some quick fashion, of the European bureaucracy, administration, political class that has been sitting on top of the British economy and society for the last 25 years. Less government is a good thing. Hopefully, pretty much everybody on Emini-Watch kind of believes that. And the good thing that should come out of this Brexit vote is that we get rid of that extra layer of government, that extra layer of bureaucracy and administration, which strangles, economies, creativity, kind of productivity, all of these things. So that's the good thing. The second thing to say is I am stunned because this could all been avoided. A year ago, this was unimaginable. Absolutely unimaginable that Britain would exit the Euro project. And this has all gone wrong because of the arrogance of the leadership of the European project. People like Angela Merkel, Jean-Claude Juncker, who's the head of the project, Wolfgang Schäuble, who's the finance minister of Germany. Their arrogance, their elitism, their complacency, their stupidity has led to the destruction of the European project. And it's all because of a decision they made to kick it in the teeth of the Greeks and let the immigrants from North Africa and the Middle East flood in their millions to Europe. The people who voted for an exit, for the Brexit in the UK, it wasn't about trade, it wasn't about the ease of travel without passports and so on in the Eurozone. It wasn't about anything to do with that. It was about immigration. And they could not stomach the fact that they had millions of people flooding into Europe with no paperwork that didn't deserve. They're not migrants from war-torn. They're coming from war-torn areas, but they are not. They're economic migrants. They're not political migrants, and they're much better off kind of staying where they are and being helped where they are or in camps close to where they are than flooding in for what they think is the freebies that they're going to be given in the Eurozone. So this is all about a decision that the people in charge of the European Union made. They should have helped Greece. Greece were part of the project. Greeks are Europeans, and they said, no, you're going to have to pay. You're going to have to pay. You're going to have 25% unemployment, 50-60% youth unemployment. We are going to put your economy on its knees because you have to pay the people that lent you money. Instead of writing off that debt, giving the money to the Greeks, and saying no to the immigrants, kind of flooding in, the 2 million plus immigrants flooding in, the decision they made to go for one decision versus the other, that is why we're in this situation. And make no mistake, this is the beginning of the end for the European project. This is the first domino, big domino, to fall. Remember when the Berlin Wall went down, within 2 years the Russian Federation had fallen apart, and the same thing is going to happen in Europe. The Eurozone, the Euro project is finished. We were going to have exit votes in Hungary, Denmark, Austria, Portugal, probably Italy. It's like one by one they will choose to go, or it'll be so damn close that there'll just be a matter of time. And this thing is going to spin apart so damn fast. It is going to take their breath away in Brussels. And once the project is gone, the euro goes, and people go back to the new drachma, the new lira, the new franc, and so on, whatever that kind of looks like. So this is not the end. The euro project is now fatally wounded, and it's just a question of time. And let's just see how quickly this thing kind of spins apart and unwinds. It's going to be breathtaking, and it's an incredibly important day in all of our lives. So the other thing to say is, this is a victory for the silent majority. These are the people that have just been quiet, sitting on the sidelines, angry at what the politicians and the intelligentsia and the intellectual class and the journalist, commentator class have been saying, and it's a reaction against the direction they have been moving in. And the silent majority has spoken now and said, to hell with this, we're going the other way. And watch out in the US, because again, that same, elitism, political class, intellectual class, they totally underestimate the Donald Trump movement, totally underestimate it. I would not be surprised if he comes in as President of the United States, and watch out. I don't think that's necessarily a bad thing. I mean, I remember the days when Reagan came in, and people in the UK, we said, what the hell are you doing voting in a fading Hollywood star to be President of the United States? Turned out to be one of the best presidents the US has had. The same could be true of Donald Trump, a TV star more than a business person, whatever, kind of coming in with just plain common sense, fixing things. And wait, it's the silent majority that have spoken in this case. And all the commentary that you'll see, all the bobbleheads that talk about this, they just don't get it. If they couldn't see this coming, if they couldn't predict it in the first place, it's like, how are they possibly going to be able to see what happens next? They're out of touch. They're out of context. They don't get it, what is kind of going on. So hopefully that hasn't kind of pissed you off too much. If you kind of disagreed with what I was saying, you probably kind of shut up listening and switched off the video kind of minutes ago. But I think there's a good number of people on Emini-Watch who are part of that silent majority, who are kind of anti-big government, anti-debt, anti-regulation, and are sick or tired of the way that the elite, the political class, the commentary class have been going, and we're all about kind of breaking through. We've gone so far down this just craziness, whether it be negative interest rates, quantitative easing, government debt, political correctness. We've gone so far in this one direction. There's people sitting on the other side saying enough is enough. Anyway, so there we go. Brexit vote, unbelievable. So what does it mean? Let me roll through my charts. First of all, just show you what we've had in the E-mini. So we topped out last night. We kind of had an exhaustion move. This is a 4500 tip bar chart on the multiple time frame view. Exhaustion move, exhaustion momentum. There we go, 2120. Fell into a downtrend, bang, bang, bang. And we're down, what are we down? 6% or something kind of down here. Kind of fallen 100 points in, 6 hours or so. Just unbelievable. Whole bunch of blue professional bars kind of coming in here at the lows at the moment, but this is just the first little move on this lowest time frame. We have to make pullback to end of trend on the intermediate and the highest time frame. So we're trying to find a bottom down here, but we've not reached it yet. So watch out. Tonight's trade, well, for me, tonight's trade is going to be absolutely kind of critical going forward. So there we go, the stock market. With the stock market, I put out a Google Plus 3 days ago, saying we had end of trend signals go off on a whole bunch of markets. I want to show you this one here. So this is the S&P 500. Here we go. This is the signal. Now, this is just the day session. Obviously, we haven't had the overnight. And I said 2060 was the level that we're going to be absolutely key. And the reason why we were topping out here, end of trend on the lowest time frame, end of trend on the highest time frame. This is all backed out of this breakout move, which God knows when did this happen. This breakout move was back in 2013, and then it's gone pullback to end of trend. And the last 3 days, that's when the signal went off. End of trend. There we go. Bang. End of trend on the lowest time frame, just creeped above the intermediate time frame. And I said 2060 was the level. We break through 2060. That shows the first sign of weakness, and we're on our way down. We'll have a bounce back at some point, which will be kind of the low risk entry point. But that 2060 level, we're now broken. We're down at 2000s, kind of down here. So we're well on our way to changing the trend direction here. And this happened on a whole bunch of markets. So we had the S&P 500 there with that double end of trend. We had it on the Dow, double end of trend. We had it on the NASDAQ there, double end of trend. The Russell, no, not that kind of right pattern. We had it on the SPY, the ETF for the S&P. Here's the overnight session in the S. We didn't have it in the S because we're just waiting for that roll to happen. And this is the roll I'm talking about. Have I got it on here? No, I took it off. So it's that we've had the cyclical turning point in the highest time frame kind of rolling over. That's what's caused this end of trend to go off on the lowest time frame kind of here. Sorry, on the highest time frame here on the S&P, the Dow, the NASDAQ, and so on. So there we go. So we saw 2060 as kind of the critical level, and that's what we broke kind of overnight. Hugely important. Now, this is what the pound did. The pound's down 10% from $1.50 versus the US dollar. Hit $1.30 kind of down here. We're kind of was it 35? 32. So it hit kind of 32 on the way down here. We're kind of bouncing up for the time being, but just a massive move in the pound. This is a 500 tip bar chart where we broke into a downtrend below 148 into this big kind of downtrending move. Bang, bang, bang. On the daily chart, this is what has kind of gone on. Just huge movement. So if you remember kind of going back to the pound bottomed out with this nice little multiple end of trend pattern here on the daily, the intermediate. We had support on the highest time frame, and this was last year. This was the strength in the pound that I was wittering on about, and then we changed. We hit resistance on the highest time frame. That kind of came in here, and subsequently this is what we've been rolling down. So we changed into a downtrend here on the pound, and the pound all the way down has been in a downtrend. All these white bars kind of going on, bang, bang, bang. So all of the white bars kind of going on. Now, here's the important thing. Everybody is talking about the carnage in the pound, okay? But potentially this is setting us up for a rally in the pound in bottoming in some weeks to come. This is the kind of activity, the kind of panic that you get that allows people to kind of switch out and take big positions in the pound or in a kind of a currency. So I know we've broken through this support level here, so we're going to have to put in some kind of bottoming pattern in the pound, but we could see that happening in the next several months or so. So it's not all a disaster for the pound necessarily, because we've had this exhaustion sell here. Let's see what the day's exhaustion kind of pattern ends up being for the pound, with a flush pattern and so on kind of down here. Everybody, all the commentaries are talking about how this is disaster for the pound, disaster for the British economy, disaster for trade and so on. Forget that shit. That is not necessarily what is going to happen. This could be the renaissance that we have for the British economy, that we get out of the European and their regulations and their bureaucrats and their political system kind of gets out of the way, and Britain is able to solve its own problems and start dealing with trade with the rest of the world, becoming far more open to trade in non-EU countries, and sorting out its problems, which is a huge amount of debt. But a weak pound for a while could be very good for the economy. And if it turns out that all the pundits are wrong, that this is actually not bad for the UK economy, that actually in the fullness and time, in the next 6 months or so, it becomes a really good thing for the UK economy, the pound, this will be the day when that kind of low in the pound was kind of put in 132, 135, whatever that kind of level is down there. That is potentially something that's interesting as a bottom kind of setting up. So that's a little bit kind of counterintuitive. Now, on the reverse side, this is nothing but bad news for the euro, because of the potential breaking up of the euro. Now people are going to say, what is going to happen to the euro project? And so, should I even be having assets being held in the euro? Now, unlike the picture for the pound shows us that we have this, incredibly important support level here with exhaustion sells kind of going on here. With the euro, what we came into was resistance. Yeah, they kind of were falling together with the pound and the euro, but this has come into kind of resistance up here. We've been in a downtrend in the euro, and here's a low risk entry point that we had a couple of days ago in the euro currency, and it's kind of fallen off a cliff kind of today. So we've gone with testing down below 110. We were up at 115 just hours ago, kind of testing down 110. We have not seen, and we'll possibly need to see another exhaustion cell pattern before bottoming this thing out kind of properly. But I can't believe that this is a good thing for the Eurozone. I think it's more likely to be a good thing in the pound, because this gets rid of all of the the naysayers and all the short volume in the pound, and we can rally from there. But with the euro, I could still see us kind of grappling with 107, 105, and then parity and so on. Let's see where this kind of goes. But it's hugely uncertain now with the whole euro project. What the euro is going to do kind of going forward. Now, because of all the risk assets kind of come off, we've had things like the Aussie dollar kind of come down. And just to say, this is all talking about highest time frame stuff. This is the highest time frame here on the pound. It's like we've been trying to find a bottom in the pound because of this thing kind of going on. Highest time frame in the euro has been a swing down. We've got a swing down happening in the euro. In the Aussie dollar, again, we had this really nice kind of bottoming pattern with a whole bunch of end of trends kind of go off. We broke into this uptrend, but I've said this before with the Aussie dollar, the reason why I'd not gone full on long Aussie dollar is because we've still got to put in our pullback to end of trend with the Aussie dollar here. So we had this nice little rally here, and then we had this nice little kind of low risk, kind of a weak pushback to the 76, 77 level kind of here with a pullback to end of trend kind of going off, and then this activity, breaking below these supports will take us into the continuation of this downtrend. So the highest time frame on the Aussie dollar is swinging down. So we've got weakness, risk off, kind of weakness in the Aussie dollar, weakness in commodities and so on. So the pound, jury's out. We could be making a bottom. We've still got to swing down in the euro. We've got to swing down in the Aussie dollar. Of course, on the reverse side, dollar index, we've got to swing up in the dollar index. Here's the cyclical support in the highest time frame. We've had a little bit of weakness into here, but now we've broken above critical kind of resistance area, and so the dollar index will be going through a swing back up at some point here. And my friend Japanese yen, bang, look at this. We got above parity today. It's kind of come off a little bit, it's kind of so far, but this was this beautiful move here where we bottomed out with all these end of trends, broke into an uptrend. There's our low risk entry point kind of coming in here, and we just kind of been breaking higher and higher. So kind of flight to quality, if you like, but because this is the carry trade, this is everything kind of falling, and so we got margin calls happening in Japan. People are repatriating funds to Japan, buying the Japanese yen and so on, buying dollar because they're also buying bonds. So this is US bonds. So US bonds, last year we started breaking into more continuation of this uptrend kind of going on here. Red bars all the way up, exhaustion buy the other day. We're still breaking above resistance kind of on these patterns here. So it's kind of a blow off move happening in the 30 years. This is the exhaustion buy that we've had, but we've got to be breaking supports into a downtrend, and so all of this just showing we keep on breaking resistance. So it just shows the strength of the markets. We're kind of moving up and up and up. And then gold continues. I thought that gold at this resistance line here would start to kind of pare back and kind of come back to the lows. We put in a little pullback to under trend under that. We didn't really break any supports of any kind of note, and we've just broken above that resistance again, kind of above there. So I was looking for a better entry point as we kind of test back with gold from a resistance down to support into whatever 1100 or 1200 kind of zone kind of here to work out of that energy. But us busting up through here just shows that there's still continued strength, and it's a little bit of a runaway trending move. So I've not had an opportunity to kind of get on board there, which I'm kind of a little bit annoyed about. Crude, but with crude, and this, the last video I put out, which was weeks ago, just talking about waiting for that swing down. We've been waiting for this swing down here. The resistance kind of comes in on the highest time frame to push us down, and finally, I think here's our resistance kind of come in with the last 24 hours. That level's kind of come in where we've got to put in a pullback to end of trend and start weakening there. So we had our exhaustion cells, bullish divergence. We broke into our uptrend, but I'm still looking for that pushback down into these lows to put in that pullback to end of trend, from which we can have a more healthy kind of bounce, because it's kind of got all the weak hands out of this move. So is that all I've got to say in terms of charts? It is. So, kind of that big picture, just, with the pound, there'll be some weakness. Everybody's saying, we're going to hull in a handbasket, but let's just wait and see. This could be setting us up for, a rally in the pound. I think potentially the weakness could come into the euro, could be weaker than the pound, kind of going forward. We still got to run that thing out with resistance to support. And it's going to run out, for the Aussie dollar and the Canadian dollar, resistance to support as well, all of those things. And meanwhile, the money's flowing into the dollar index, and it's flowing into the Japanese yen as kind of risk off kind of trades, and into bonds and out of equities, and into some extent gold, and that's kind of surprising me. And crude could add this kind of move back down, and that's the move I'm waiting for. Pull back to end of trend on crude, bottom this thing out really nicely. It's taken a long time. I thought we'd been done by the end of June with this kind of testing back down, but let's see. What we're looking for is big blue professional down bars with crude, some nice big ones, big volume days on the way down as we come into the 40s and the 30s, and just that'll be the sign that the big money is kind of picking up this sell-off in crude that potentially we're going to see, because we've got the swing down happening there. So there we go. Incredibly important day, and also exciting day. If you got on board some of these kind of moves to the downside, good for you. I'm going to wait until this evening's trade to kind of get into it. Anyway, so I hope your trading is going well, and looking forward to the next couple of days.